Healthcare giant Johnson Johnson said today it will split its consumer business consisting of brands like Aveeno and Tylenol from its pharma and medical device business. Both businesses are very significant in size. J&J expects its pharma and medical device business to bring in $77 billion in sales this year. The consumer business is seen posting sales of $15 billion this year. Joe Wolk is the CFO at Johnson Johnson and joins us now. Yahoo Finance senior healthcare reporter Anjali Kamani is here as well. Joe, good to see you here. J&J, founded in 1886. Did you and the team think about the historical significance of doing this?
Good morning, Brian. It's a pleasure to be here with you. We certainly did. More importantly, the board did. We have a long-standing history, but that history is really earmarked by bold decisions, entering new markets and aligning our business to where those markets are going. We think today's announcement really reflects not only the boldness of Johnson & Johnson, but also the forward-looking nature and the long-term perspective that we have when we manage from year to year. So this is not a decision that was taken into lightly. The historical significance of it within that framework of better than 135 years is something that was top of mind as we contemplated the decision.
Joe, you know this better than anyone. You've been at J&J for a while. There are people that own J&J shares that for decades, and they like the predictability and the stability of the company. I mean, can you assure them that there won't be any distractions as this business is split off over the next 18 months?
Yeah, Brian, that's a great observation. One of the things that's incumbent upon us as senior leaders, whether it be for the new Johnson & Johnson company or the new consumer healthcare company, is to make sure that we deliver on the expectations and the predictability that shareholders expect from us. We had messaged some of that predictability with respect to our dividend policy going forward. We don't plan to change that. We intend to have a strong investment-grade credit profile for both new companies, and we're going to invest for the long term. So I think those predictable elements that shareholders of Johnson & Johnson have become familiar with over the years will continue to be intact. But we see this very much as moving towards new market trends. If you think about the innovation that's happening across all three of our businesses, it's happening in very different ways. The new Johnson & Johnson company, comprised of pharmaceutical and medical devices, is heavily regulated. It has a physician and patient type of dialogue when decisions are made. In the consumer space, healthcare and good health has kind of come to the forefront through the pandemic, where everyone realizes that in order to avoid the consequences of a pandemic, being healthier is probably one of the best preventative measures we can take. People are much more interested in healthcare, but they're making decisions more independently than maybe relying on the scientific professionals. So with those diverging trends, we think it's really a great opportunity for strategic reasons to split the company up at this point in time. But from a financial perspective, these businesses have never been healthier. If you look at consumer and where they were just 4 or 5 years ago, we had trouble hitting market growth levels, and our margins were well below the peer set. Today, most quarters we are at or above market growth, and our operating margins are right in line with peer set. So the good news there is still maybe more to come. In terms of pharmaceuticals and medical devices, our pharmaceutical business has been a standout now for better than a decade, growing at well above market growth. And the medical device business was really improving their cadence of growth, improving growth year over year heading into the pandemic. We all know what happened last year, and even some of it is happening this year with elective procedures being somewhat deferred. But we think that business is poised to continue its upward momentum trend in 2022. So we think we're very well positioned, and the diversification still resides. If you think about the remaining Johnson & Johnson company, the new Johnson & Johnson, it's still going to be the world's largest, most diversified global healthcare leader.
Joe, I'm so glad you brought that up. And by the way, good to speak with you again. I want to talk about this split and how it's going to impact what we see in future earnings. Because of course, you've been able to sort of buoy if one sector or one section rather is doing worse, in one quarter versus another, and you've been able to look at that long-term growth, and that's where a lot of the stability for the company has come from. Now you're splitting it, so you have a little bit of that riskier pharma side exposed. Are you not worried about that and what it will look like in the future, especially in an environment where drug costs and device costs are so front and center?
Yeah, Angeli, we did think about that specifically in terms of the diversification. We think the little bit of diversification we're giving up here is well offset by the strategic movement for the markets that I just explained, as well as the potential unlocking of value for the consumer health business, as well as our medical device and pharmaceutical businesses. We see a convergence of technologies, and if you think about payers and what they're specifically requesting is certainly lower costs, but also solutions that go from end to end that provide better outcomes for patients, better prognoses based on data. We are very uniquely positioned to deliver that for not only payers and hospital administrators, but for patients as well.
Hey, Joe, it's Julie. You said unlock value a couple of times. Hi. And right now I'm seeing those J&J shares up a little more than 1%, $165 a share. You're a $435 billion, give or take, company. What does unlocking value look like? What do you think the stock should be valued at? What does this company into look like in terms of how you guys are estimating it, an appropriate valuation?
Yeah, well, Julie, the one thing, I might not know much, but I know that not to predict markets. And we think this is the right strategic decision, just based on where market forces are taking these respective businesses. I think the value over time, this will take 18 to 24 months to complete the transaction. And I think over time, investors will get very comfortable with that. We're glad to see the stock is up today, but this announcement wasn't based on a 1 day or a 1 week move in the stock. It's about long-term value.
But to be fair, but if you're talking, sorry to interrupt, but if you're talking about unlocking value, you're saying today that these companies are worth more than where the market is pricing them, right? I mean, that's effectively what you're saying. The market is not pricing it effectively. What is an effective price? Like, what's an appropriate price then?
Yeah, so I think one way to look at this, Julie, is let's look at the new consumer health company and what that could potentially deliver. We've worked closely with banking advisors, and if you just look at consumer peers today, their forward-looking earnings valuations or multiples are around 22 to 25 times earnings. We don't believe we're getting the credit for really a stronger consumer business than what was in place 3 years ago. And so from that perspective, I think that's how the best answer that question in terms of the new consumer business. In terms of having more focus for investors in pharmaceuticals, I think this will put a spotlight on just how significantly stocked our pipeline is going forward, addressing unmet medical needs with our current portfolio, but also new therapies that are cell-based and gene-based. It's very exciting. And then you hold the promise of combining those therapeutics with potentially a device. I think it's very unique to J&J in terms of the capabilities we provide.
Joe, this is Emily here. You were just talking about the benefits and the unlocking of value of this split, but are there any benefits of scale and synergies that exist now between these business units that, especially on the research and development side, that J&J will be losing because of this split?
Yeah, I think, Emily, when you look at the consumer R&D, it's very different than the regulated environment that occurs in medical devices and pharmaceutical. It's much more significant of an investment. Now, we've not been shy about making R&D investments. Each of the last couple of years, we've increased by close to $1 billion in each of those respective years, improving the percent to sales ratio. Because we are managing for the long term. But it's a very different equation when it comes to innovation. Innovation is clearly important. Good health is clearly important. We want to have scientific basis for the claims that are being made on new J&J as well as the new consumer health company. But it's a very different proposition in terms of just the level of investment when you look at that.
Joe, I can't help but notice that the pharma division is the one that is going to keep the legacy name, and consumer brands, while they are known by sort of their own, they have their own branding, are known independently. And I know you cited e-commerce and the change in distribution to why the consumer sector is going to get a new name. I wonder, though, does new branding also help with what has happened, especially with the powder lawsuits and sort of the tarnishing that has happened there?
Yeah, Angeli, I would say that a lot of these brands stand on their own. If you think about Tylenol, Neutrogena, Aveeno, Zyrtec, they're not really associated with Johnson & Johnson's. There is the Johnson's baby that you've mentioned, but that still has a lot of respect throughout the world. And so I think these brands will function perfectly without the Johnson & Johnson backing because they're not really known in that regard.
Joe Welk, CFO at Johnson & Johnson. Good to see you. Have a great weekend. Appreciate you coming on today. Good to see you as well, Anjali Kamlani.